Okay, quick Monday morning radar update. So I'm just going to buzz through the markets this morning quickly, and let's go and have a look at this our big picture roadmap. Basically, what we've been following for the last seems like forever. I'll just jump on the S&P. Obviously, it's about, as I always talk about. If you want to sort of get my more info on this, go to ShareScope tutorials and have a read through those. But when looking for a pullback area in a market, you've got to watch the strongest markets. It doesn't matter whether the Russell is leading lower, as they call it. We're looking at the structure of the strongest markets first. One market trading, new lows does not make a trend. One market does not make a trend. So it's always going to be a numbers game. Now, that being said, some markets are up, some markets are terrible, aren't they? So, it's not really, we haven't really got a good weighting of a numbers game anyway. But I'm not going to watch the Russell over the Nasdaq and the S&P. And I trade UK stocks mainly, so they're going to be dragged around by what the US markets are doing anyway. So let's just go through these markets. I'm just going to put it on a weekly chart for you, and let's get the charting 101. This was the low, and you can go to the ShareScope tutorials for why we looked at this low, and this will give you exactly what I'm talking about. This will sort of unlock my own methodologies on these kind of things. So we were waiting for the strongest markets to land, weren't we, in the bear market, and it's the S&P and then the Nasdaq, or they were within a week of each other, I think. Now, after the markets came into that zone of interest for us, we punched up higher, we came back in, and we did a price action reversal. Might sound simple, but that will happen in every reversal. Some will be like a V bottom, but will turn into a price action reversal. Go and have a look at the pandemic. But, price action will happen. That's the beauty of price action. It will happen. Trends stair step higher. We might have been looking at more of a secondary low here, but it's in place and it's holding is probably the best way to look at that. Let's go to the Nasdaq. This was the low, and we actually got a higher low here and a higher low, high here, and this is where all the Nvidias and all those stocks that they left the station around here. It's a market of stocks. Leaders lead. Just because the market might look a little bit ropey, it doesn't mean that you shouldn't be looking at the best stocks, what control the market. Obviously, one stock does not control the whole market, but when you see the group breaking out, you've got to believe what your eyes are telling you. You're looking at the strongest markets and the strongest stocks in the strongest markets. Now, the Nasdaq just went off on this ripping run, and there was a lot of bases in stocks around here as well, and we got that real, investors were even sort of making sort of, if you're not taking part in the technology rally, you're missing out quotes up here, and when you start to see that, I mean, it's obvious that, anyone who didn't get involved where the low risk entries were should not be looking to get involved up here. And, this is what the market does. Everyone gets caught chasing the news rather than watching the leaders. You've got to believe your eyes in this game. Your eyes will tell you what's happening now. If you need someone else to tell you what has happened, it's a pure punt on guessing that it should happen again, or if you see a trend, you've already missed a trend. You've got to wait for your low risk entries. So rinse and repeat. You know,
The
the
footsie
job
over
here is
sold.
to watch what the stocks are doing and see how the stocks set up and the stocks what have been consolidating. It's not about just dead cat bounces on stocks what have beaten up. That's you've seen a lot of that last week because everyone got a little bit of juice in all those terrible stocks. So you'll see a lot of people who are underwater will have a bit of a bounce in the portfolio last week. After that kind of market environment, to make money, you've got to ride stocks what trend. You only get paid by trend. Um, I commented last week that looking at AIM stocks, cash in my brokerage account pays more than the dividends of AIM stocks. That is the reality of this. Another thing to note is locking in, a 5% yield for a year. You're going to look back in the future and you're going to go, well, I've just lost a lot of money by locking in that 5%, haven't I? Because if the market trends from here, you know you've got to look at what you've lost out on. Locking that money in. So just a few things to think about. As always, I try and sort of just share my own thoughts to open the mind. Um, I'm going to throw this chart onto a weekly chart now, and we're just going to go through these markets, and I'm going to show you something. The transports, big gun average down here, the 50-month active low, higher lows. We had a higher high here, and it did work, but it still pulled all the way back in. Bigger price action here now. We're up on the long-term trends, but down on the short-term still. We're in an area where the market just needs to go back to those 52-week highs, which are a lot lower than the previous highs. If you look, well, not that much, but you'll see how the 52-week high comes in, and now it's here on the industrials. So active low, higher high, and then a big deep reset into the base. But I'll just show you what you're looking at here. We're trading basis volume conviction. You can dig into that in the website, in the YouTube tutorials, trading basis YouTube, and I've also covered it in the articles at ShareScope, probably the last one. But high volume swing week. This is the weekly. I'll also just note, this is where everyone gives up, and rinse and repeat. I try and teach as much as I can about volatility and position sizing, so people never throw the towel in. But it's just the nature of what we deal with here. Psychologically, people aren't set up for the markets, are they? And you've got to desensitize yourself to this stuff, and that's through having good risk management. It's not through sticking your head in the sand. So look at this big hat. The prior week everyone was throwing the towel in, and then everyone's doing high fives now, aren't they? But that is volume, and that should be noted. We don't know where it's going to go next, but we've had our first high volume week up in the whole pullback. Things to note, look at that one on the S&P, fantastic, and a little bit shy on the Nasdaq. Nasdaq can do its own thing as well. It's had a really good run. It's a case of these stocks are probably basing out now. If you go looking through all those leaders, at best they will be basing out, and new stocks have to rotate and help the cause for the Nasdaq. But still, just a channel in the Nasdaq down to the 200-day or 10-month as we use, and Russells, they should be the weakest. It doesn't matter whether this looks like a big support area or not. It's not important, but it has turned around on this occasion. It wouldn't matter if it went lower. It'd still be about watching the strongest markets. The DAX has come into this little area here. It's an obvious area. DAX does trade a little bit wild. The bearish ledge there a while ago. The FTSE 100 is just going sideways. You know, there's a few FTSE 100 stocks what are hitting the swing screens. The 250 is just in a huge messy base. You know, the other thing to just note is you have not missed a single thing in the markets. You know, missing a bounce last week. You know, it's not a game of catching dead cat bounces. It's a game of riding trends. And you know, even if you're not a trend follower, you still only get paid by riding a trend. You know, small caps, you know, down on the lows there, big loose base, so they should be. In the AIM market, I mean, you know, this is a pretty useless market for anyone to follow, but yeah, that's what we're looking at. Other things to sort of note here, let's just go into TLT, and you know, we've been looking at this volume for a while, and he said we've had the highest volume. This is the highest weekly volume we've had in the history of TLT, I think. Yep, and we were noting the highest volume on the down move as well. We started trading the highest levels traded on a weekly basis. And if you go to the monthly, I mean, look at that monthly, you know, huge monthly distribution. That's basically, and when the move slows down but the volume goes up, that's because the shorts are starting to cover and soak up that supply. So a little bit niche, in-depth sort of volume tutorial there. I will also just bring over into the mix here, you know, I run some trend models on the market and on the stocks what make up our market in the UK. And you can see, you know, we got down into, this was the market bottom, the bear market bottom, this was the pandemic low, this was the prior correction low, and this is where we got to this time. The 350, this was that you know, flight to quality in the 350 stocks, and it rolled over faster than the market that did it. You know, people got crushed who chased that trade, and you know, they're both down. We call it the crickets to popcorn scale, and you know, popcorn, crickets, you know, we're down in the crickets. Obviously that's very obvious, isn't it? Very simple but very obvious. We knew we were in the crickets, that the trend models knew we were in the crickets. The volume was sort of showing, you know, this is down into some big areas as well. And I'll just jump on USD here. Look at this big outside down week on the USD. And let's just jump into oil. I'll just bring up, I think we've got volume on USO. So we had this big reversal here, and you know, oil coming back in line. Oil's in an uptrend, and it's in a normal retrace area here. It would be better, you know, the fastest injection of, you know, fastest way to help them, the stocks, is for the oil price to come down, you know. And you know, my view is if it came down into sort of this range, it would be just happy days, wouldn't it? You know, it just, that turned out to be a high, and it just rolled back down into the range a bit more. That would just be fantastic for us stock traders there. So that's my view on the markets at the moment. You know, I wouldn't say it was an orderly pullback. It was very orderly in the kind of stocks I'm riding, and I don't think, I didn't have to sign into my account once last week. Nothing stopped me out. I did sign in to buy, to just add to some positions. But yeah, I mean, let's just go and look at a few stocks. I've posted these charting focus on the at Stelsurf Twitter, and Ashtead Technology. You know, this is the kind of stock you should be riding if you're a growth investor, because this stock has growth, and obviously there is no entry on this stock at this point. The entries are behind us, but I posted the last entry on the charting focuses on Twitter, and whilst the market's been doing one thing, this stock has just been steadily plodding higher. So things to note there. Another one I think I posted was Hills, wasn't it? So there you go. Hills, pretty orderly, pullback. But there are stocks working, and all we've got to do is keep watering the flowers and prune the dead heads, and put the losers, let the winners run. Take our brains out. We're just passengers here. So that's my sort of view on the markets, and we've had an extremely good week last week for every kind of stock. So back and fill would be extremely normal, and it's probably going to be a good week to see what stocks are looking interesting. Have a look at stocks what are structurally just holding up. After a big week last week. Okay.